Hey guys, this is Cameron with Emerson House Buyers. Every week I bring you tools, tactics, strategies, lessons I've learned, things that I've found useful, beneficial, things I wouldn't do again, and just try to overall help you investors out there or people looking either for your first deal or your next deal. I think all these lessons are more so principles, which are foundations that can be transferred no matter what stage you are in your business. Um, Today, I want to talk a little bit about quickly making an offer. So, I had a question about how do you make an offer quickly? Because I can look at something in 5 minutes, in less than 5 minutes, and usually give an offer. So, when you have your initial goal and you set that and you say, I want to buy 10 houses this year, or maybe it's just one this year, whatever it is, you need to start walking backwards and work backwards from that goal. So if your goal is one house, you might say you need to make 10 offers to get that one offer accepted. Out of those 10 offers, you probably need to analyze 30, 40, 50, and you just keep walking down the line. So then you can see it's like a funnel, right? You talk to so many people, you do so many walkthroughs, you make so many offers, you get so many accepted. And you just walk down that chain, that line, that funnel, and you funnel people into um, the deal, your deal, your offer, what you propose to you get a deal. So how do I do it so quickly? So that's kind of first component. You got to know how many you have to do, and how I do it so quickly is I have a spreadsheet. It's a simple spreadsheet that takes into consideration taxes, insurance, some capex. There's a great article on Bigger Pockets about how much capex you should have or capital expenditure, and so I just average $200 a month. Some of my properties are going to be 300 because they're more expensive. It costs a lot more to do. You know, $300,000 house is going to be have a little bit um, more expensive finishes than a $100,000 house. But overall, if you just do $200 a month, $2,400 a year, that will get you ACs, new ACs every decade, roofs every 20, 30 years, blah, blah, blah. Keep going down the line. That will handle all that stuff. And it's conservative. So you're not going to get hurt by doing that. So you have taxes, insurance, your mortgage, which you're going to do your calculation on. If you've already been pre-approved, you should know that number. You got capex, which I do $200 a month, and then you have what you want to make. Actually, you have property management. Trust me, whether you're whether you're the type of investor that just wants to own one or two, or the type of person that is looking to build a business out of this and have 20, 30, 40, 50, 100 properties, factor in property management. Now, I'm going to go on kind of a side note here because this is a huge, huge, huge piece, property management, when you factor this in. Most people assume 8 to 10%, which is logical because that's typically what people charge. I've seen as high as 12. But what people don't understand, or what is often looked over, is the fact that you have to account for leasing fees. So when somebody's managing the property, they're going to charge you the standard 8 to 12% every month of your gross rents. But when that tenant wants to move out and you need to place a new tenant, typically you'll have a leasing fee. I mean, I don't know anybody that places tenants for free. I don't know a single property management company that will do that. So that is 1 month's rent. 1 month's rent, 1 divided by 12, is 8.3%. So if you're charged 10% on a monthly fee, and then you're charged 8.3%. If you're charged a standard 10% fee for property management, and then you're charged an 8.3% fee for leasing fee when you have to fill a vacancy, you're at 18%. So let that sink in for a second. 18%. I do all my math at 16%. So on a $1,000 a month rent, that's $160 a month that I take out for leasing and property management. Now, some you guys are going to say, "Oh my God, we don't have to fill a tenant every year." That's true, but I don't account anything for vacancy anymore. So that actually includes my vacancy. So that's assuming that I get a new tenant every 12 months and I have to pay a new leasing fee. Now, is that going to happen? No, people will stay. But there might be a month or two that I sit with the property vacant. So that'll kind of cover that. So if you have a tenant stay for 18 months, and then you have a few week vacancy here or there, those will account. That 16% buffer will account for that. That's what I do. Not everybody has to do that. I'm just telling you what I do. So to get back onto track, how I make this quick offer, which this isn't a very quick video on how to make a quick offer, but I have the spreadsheet with all these. So let's just go through it. Mortgage, taxes, insurance, CapEx, property management, and then I have my bottom line number. So again, my numbers were different before. When you evolve in your business and you get more and more properties, you'll adjust your numbers. Before, I wanted to make a 30% plus cash on cash return. So now I've expanded things a little bit differently. I just want to clear $100 a month and make 15% rate of return or cash on cash return. So things like I said are changing a little bit for me, and you'll notice for you too. Maybe you're pretty strict on your first deal because you want to be protected. You want to make sure that you have a great first deal to get you a solid foundation. And that was my thought process. I wanted a really, really, really good set of properties that were solid investments to get me started. So once I got a solid foundation, then I can build on top of that. It's like building a house or anything else. If you don't have a solid foundation, then a small little storm or something minor can create big problems. So now that I have a strong foundation of great cash flowing properties in great areas, then I can build, I don't want to say bad investments, but okay investments on top of those, and I'll be all right, and I'm comfortable with that. So that I literally go, I have calculations, and I mentioned this before, for how much paint costs per square foot, which is about $2. I know what carpet costs per square foot, which is about $1 to lay, and for materials and labor, $1 a square foot. Drywall's $40 a sheet. Yeah, what I say, paint was $2 a square foot. You can go through all of these things and figure them out on a per square foot basis. So I'm looking at a 2,000 square foot property, and I know it needs paint and carpet. I can do that quick calculation. Okay, it's $5 a square foot times 2,000. That's $10,000. Is that conservative? I don't know. We want to look at the AC and some other things as well and talk to them about foundation and the roof, the age of the roof. But on the whole, that will get you a quick offer. Then you can go look at it, and if you don't want to, you can say, hey, I'm going to be about, this is what I tell people, I'm going to be about in this range. I'm going to be about $150,000 to $160,000. Can I come look at it? I can give you a hard number. If they're interested in that, usually you can work with them then. If they're not interested in that, then you'll have to play the long-term game, and hopefully you can work with these sellers a little bit more. But maybe it's something they're not even interested in. Maybe you're not a good fit for them and you just move on. So I estimate these repairs. I take my sheet, and like I said, it's nothing fancy. Do all the math, literally punch these numbers, what's taxes and insurance, blah, blah, blah. These estimates, and then I have my numbers. Does it meet? What do I have to pay for this to be able to get 15% cash on cash return and at least $100 a month cash flow after accounting for all those factors? I go, okay, that's it. This is my offer, what I can do. Simple as that. Now, some depending upon what your strategy is, I used to really care about, I still do, but it's not as imperative as it was before to care about what the market value is of the property. I can pay what I can pay to get my cash flow. So depending upon if you're buying conventional or you want to do a BRRRR, where you buy, rehab, rent, refinance, and repeat, that requires you to want to take into consideration a little bit more of a market value of the property, because you're going to get back 80% of that. So if you're buying it with your own cash, you'll really want to look at that. But you'll look at market value, what the property's worth, how much you have to put into it, what the rents are. You pull all those numbers. You look, rent minus what I just said, all those factors I just said, and then does it meet your criteria? punch those in, boom. That is as quick as you can get. If you guys don't have access, see, I have MLS access, so that helps me get some of these numbers very quickly. If you don't, I will say I've used Zillow for Houston, and notice Zillow rents are pretty accurate. The actual market value, it's pretty shaky. I haven't tried to look at some of those other sites to see what they can get for you. If you know somebody who's got a realtor access, you might want to ask them and see if you can get something, work something out with those, maybe a friend of something of that nature. But when you get market value, you get rent value. You can look up the taxes and on the county appraisal, and then you'll have the insurance. You might as well figure 1%. That is going to be high, but you probably figure 0.8. That'll get you pretty close. Now, that's for Houston, not in a flood zone. You'll have to look if you're in another area, or you're in a flood zone, or you're on a coastal property. Those totally different. Insurance is way higher over there. And I'm going through that right now with some Lamarck properties on the coastal properties. But guys, I know this wasn't short. I'm trying to, there's a lot of caveats, how do you make a quick offer? There's a lot to be said, and I'm just going to recap really quickly on what it was. I have my spreadsheet. I look up the market value of the property, what the market rent is, how much repairs, how many, what kind of repairs it needs, and I have my list of per square foot, what stuff costs. Boom, boom, boom. Okay, that's going to be about $10,000. It's 2,000 square feet. It needs $5 a square foot work. That's about 10,000 bucks. Put that in my spreadsheet. Do I get, after taking in consideration of my mortgage, taxes, insurance, $200 of capex, and 16% property management, do I clear $100 a month and have a 15% cash on cash return? If those answers to those questions are yes, I'll make that preliminary offer as a range to say I'll offer you between 50. I'm going to be somewhere between 50 and 60,000. So I know pretty quickly, hey, if a realtor sends you a deal, this is where I'm going to be, about 50 or 60,000. You can ask them, hey, tell me what market value is. What's the rent? What could I rent this for? And they'll tell you. They want you to buy it. That's how they get paid. So, guys, I hope that helped. I know this isn't short on how to do that, but really, if you set yourself up a very simple spreadsheet with a couple calculations, it'll be very quick. You can look up, I'm sure Bigger Pockets. Well, I know Bigger Pockets has a rental calculator that's free. You could use that, but you don't need it. I mean, you need how much you invest, and if you can do any basic arithmetic, then you can figure out what your rules are. And I don't know what your rules are. If you're trying to quit your job, or if you're building up cash flow for you're not trying to build up cash flow, you're trying to build up equity, or you're trying to make an investment so you can have it for your kids' education when they turn 18. All different goals, all different strategies, all different ways of doing it. But yeah, guys, that's how I do quick offers. So I hope that helped. If it did, let me know. If it didn't, let me know. Give me feedback, please. Trying to make this as helpful as I can for you guys. And if it's not, I want to know. And if things are very beneficial, I want to know that as well, so I can keep doing those things. And again, if you found it beneficial, share it with somebody. Let somebody else know in the community. So thanks, guys. Appreciate it. Keep asking questions.